AI and algorithms are never going to make exceptions. If you're sitting on a really good time right now and things are going well and cash flow is good, you're healthy, like go get a line of credit and sit on it. Understand how business credit works. It's a tiered system, right? So it's 4 tiers that you have to work your way through. When you're getting calls from these brokers that are selling you this stuff and they're like, well, if you take this loan, it's going to build business credit. Chances are it's not. Close to 100% of lenders now are doing stuff via algorithm and automation.
All right, welcome to another episode of Expanding Local. Today I'm here with Paul Childers. He is the founder of Blue Sky Biz Solutions, which is a company that helps 7-figure blue-collar business owners access capital that either doesn't report to their personal credit or use their personal credit in order to scale successfully while protecting their personal assets. Paul, thank you so much for joining.
Yeah, thanks for having me on, Will. I know we've kind of run in the same groups and been kind of in contact with each other over a few months, probably longer than that if I go back, but it's good to be on.
Definitely. What got you into this space?
Yeah, so my background is in automotive, so I was a general manager for a Chevy dealership. We did a lot of fleet deals, helping people finance their vehicles underneath their EIN only. And so learned a lot just from that experience of doing things. And so automotive is great, but automotive is also very demanding. Hours, days, you don't get a lot of time off, you don't get a lot of freedom. And as my kids were getting older, it was time for me to kind of do something else. So left automotive, went and was a sales director for a larger ag and tire company. And that was fine, but my heart wasn't in it. So when they ultimately came to me and wanted to demote me and move me to a different position, even though we had grown, like it was kind of like my cue to walk away. And so I left and decided to start my own company. And this is, we've gone through several iterations since we started this company. When I first came out, I was part of another group as a 1099 called J Galt. Some people have heard of them, some have not. I left that company very quickly because I didn't agree with what they were teaching or how it aligned with the actual lending space, and decided to bring it all in-house. So, second iteration was me doing the business credit, but also focusing on lending. And what that opened my eyes up to was that there's a gap in the marketplace for business owners that want to go get loans, but don't understand lending at all or how to prep or prepare for it. And nobody's teaching owners how to be proactive about this stuff and set themselves up properly. We're just basically just gripping it and ripping it, if you will, as owners, and just going, oh, I'm going to go apply online. I'm going to go do this. I'm going to go walk into the bank. And we keep getting denied for stuff, and we don't always know why. And nobody stops to think about, why am I getting denied? So what we've been doing is we got rid of the direct lending part of things, and we've been helping business owners understand why. Why are we getting denied? How do we need to be set up to be approved? What does our credit score need to look like? How do we build a business credit score? What do financials need to look like? And then what lender should we be partnering with? When should we go and use those online lending partners and brokers? When should we be rolling in traditional banks? And then when should we be maximizing our relationships with direct manufacturers like Ford, Chrysler, Dodge, John Deere, Case, Kubota, etc. Right? So that kind of is how this all escalated to where we are now, but what that got me into this was just a malcontent, if you will, with my current trajectory of life, feeling like I should be doing more and kind of needing to get shoved out the door in order to jump into this space. So in a roundabout way, I've been probably running from entrepreneurship for almost 37 years before I decided to jump in and embrace it. So
why are business owners not getting approved or getting rejected for capital?
a lot of it is timing, right? We go in at the wrong time or try to go get loans. I would say a vast majority of people getting denied is timing, because you go in when you need the money and you don't go in when you're sitting good, right? Like we wait until the end of the year when we get into a slow season and our bank accounts dip, our savings dips, our cash reserves dip, and then we try to go get a loan. Well, the problem with that is now you look extremely high risk on top of a bunch of other factors to these lenders. So of course you're going to get denied, or you're only going to get approved for the type of loans that cause headaches, right? Like daily, weekly payments, high interest. So I would say that's one of the bigger parts. The second part is just not understanding your own numbers, your financials. The amount of businesses that I come across that don't have a real good grasp on their financials, profit loss statement, bank statements, balance sheets, how to articulate what that all means and how it connects to each other to a lender, right? So if you don't know your numbers and can't explain them, how do you expect a bank to get you approved? Because they're going to be just as confused as you are. And the third one is credit. A lot of us jumped in, we started our own business. We didn't know any better. We abused the crap out of our personal credit to stay alive and fight for another day. There's nothing wrong with that by any means. I think it's almost a trial of fire for most business owners to prove how bad you want it, at some point. But the thing is we don't realize that as we grow, there are better ways to do things on our business that doesn't require our personal credit to be involved. And in fact, our personal credit should be as minimally involved as possible because that's the separation of personal and business is super important.
Definitely. And can you go into the difference between personal credit and business credit? I know you kind of like mentioned that the business credit doesn't report to your personal. Is that always the case, or is it the way that you do things? How does that work?
So, depending on how you're structured on your loans and on your credit cards and all that kind of stuff, is how it's going to end up reporting, right? So, you can have a business credit card, we'll say, right, where you're personally guaranteed on that card. But that card may not report to your personal credit unless you are very delinquent or derogatory on that card. Then it will report to your personal, right? So you still got to manage the money that you have properly with the majority of this stuff. So there is a difference between a personal guarantee on the business and a personal guarantee on your personal, though, right? A personal guarantee and a personal loan shows up on your personal credit report, which means that no matter what you do, that's going to always be affecting your utilization numbers. And it could also affect your payment history if you miss a payment in a bad way, right? On the business side, though, a personal guarantee on a business side doesn't show up on your personal credit report, and you may be able to get by with, a couple missed payments and then have those fall off quicker than if they're on your personal, right? But that stuff doesn't affect your utilization on your personal side. It just affects the utilization on the business side. So they're not connected necessarily directly. Now, if your business credit score is high enough and you can get financing 100% on your business, there is never a risk of any of that coming back to you personally. Even if you are derogatory and behind on payments, it will just affect negatively your business credit reports and will never touch you personally.
Okay. Um, so you kind of mentioned that there's a lot of business owners that run up the credit card bill because they don't really, they're just trying to live. They don't really know what they're doing. And I myself was definitely one of those people. When you're at that stage, like how do you start building business credit? Is it possible without fixing your personal credit first? What's kind of like the route you guys recommend
Yeah.
there?
So depends on your industry, right? I mean, I work with home service businesses, and the easiest way to get credit and access to capital in the home service space is start using gas cards, right, to fuel your vehicle. Stop using personal credit cards. Stop using your debit cards. Go apply for a WEX, a Shell, Gulf Coast, whatever, a local gas station that you can apply with a commercial card with net terms, and start using that to build some credit. All of the suppliers that you buy from probably offer net terms. Not all of them report. You have to ask them, do you guys report to business bureaus or not? Some of them do. And so the ones that do, you may already be getting a credit report from them and you don't even know it, right? A lot of people don't even know they have a business credit report. So that's the fastest way to grow out, credit on the business side. And those couple of things don't really require any kind of look into your personal at that point. Now, I do want to constitute this though, because I am a big believer that your personal credit should also be positive and good as well, right? Like, I get if utilization's high, I've been there, right? I've had to use an SBA loan when I hit the 2 year mark to roll myself out of personal credit debt because that's what I had to use to survive the first 2 years of my business. But there are ways to roll yourself off and roll it under the business. You just got to know how to do it and stair step your way off of it. And some of it is just discipline. But ultimately speaking, yes, you can build business credit accounts without having to rely on your personal credit, and you can get some stuff started that's beneficial.
You're in a weird industry where I think it's almost like cybersecurity. People don't realize that they need you until they need a loan. And you're like, the kind of service that you help people find those loans, but it's harder when they need it than when they don't need it. How do you navigate that and then like set expectations with business owners before they start working with you? What does that look like?
Yeah. So what's fascinating about us is we're not a direct lender. So like we don't really survive off of getting people into loans, right? Our programs are set up in a way where we do proactive based procedures and processes, right, for a lot of business owners. That doesn't mean that we don't have lending partners that we partner with and send people to when they need the loans. But it's really just looking for and setting stuff up online with examples of customers that we've had success with, because ultimately we are looking for proactive businesses that are in a growth phase and are looking for other avenues to grab and grasp onto to be able to grow quicker with more leverage that doesn't have to affect negatively their personal credit side of things, right? So there is definitely that demographic that we target of business owners that are in a growth phase, understand they want to do things differently, and are willing to put some work and effort into facilitate that change. So that's a lot of where our marketing comes along with. But along the way, when we do get ones that come to us that have issues, one of our biggest strengths is explaining to them, hey, look, like we reviewed your files. We can send it over to a lender. You're probably only going to get approved for the same stuff that you're in. It's always worth looking at. When you get your contract, let's review that and see what actually comes of it before we make a decision of whether we should jump into it or not. Because if it's just going to keep you back in this loop, then the answer to your question is we just need to roll our sleeves up and we need to sell our way out of this spot and then not go back into it, right? But when they come to us and they want to grow, it's always prefaced with this is at a minimum, it's a 6-month process. It's probably going to take 12 months for us to build this out, right? And the success of the program really does rely on the level of involvement of that business owner with us and how well they take the things we give them and they run with it, because we can't go and do a lot of the stuff for these owners because we're restricted. We just roadmap it and then we're there to help get out of these little tight spots and make suggestions. So
Do you ever run out of things to do for these businesses when it comes to like building their business credit, or is it just nonstop? There's always a next level.
ultimately, like you do get to a spot with these businesses where it's like we're done for now, right? Like I just had a company that we were working with that we'd been working with for about 8 months. From the time he started working with us to the time he ended with us, we increased his access to a variety of forms of capital by almost $850,000. That none of that relied on him personally for. And he was to a spot where he's like, I'm good. I don't really need anything right now. And I was like, cool. Well, as you cross over these next thresholds, we need to be in touch, because I said you're getting really close to the corporate side where we need to roll you into corporate credit cards here in the next 1 to 2 years. Right? So then how do you stay in touch with those people and stay in contact with them? That's where having a good automated CRM system and a good marketing process really comes in handy, right? So yes, the answer to your question is yeah, we absolutely have some clients that we get to a spot and we're done. We have other clients that have decided to keep us on as a retainer because they want us there to review pretty much all of the loans that they're getting into to make sure that they're set up right and structured properly. That's fine too.
How does Dun and Bradstreet play into all of this?
So Duns and Bradstreet is becoming a little bit more irrelevant in the business credit space, but it is still one of the largest facilitators of business data and information in the financial spaces. So it's still important to have a Duns and Bradstreet number. Banks and lenders are relying more on Equifax, PayNet, and Experian to make decisions on the business side of things. But Duns and Bradstreet is one of the better facilitators of if we update your information with Duns, chances are it's going to be updated fairly accurately across all the bureaus. So it's still important to have it and have it be accurate and have stuff reporting to it.
So obviously I do marketing. I have an agency. Um, and like a lot of the stuff we do is making sure that, name, address, phone number is consistent across different citation sources. Even though that's a little less important in Google's eyes, I'm curious how that looks in the lending space. How important is it to make sure your online presence is clean, like consistent across the board, listed in multiple places? How does that play into all of this?
It's probably one of the most important things that you can do as a business, right? Because at the end of the day, what we're trying to do is allow lenders to vet and verify your business's existence on the business itself. If they can't do that, it's always going to fall back to verifying the owner, and that's where these personal guarantees and credit pulls are going to come in. So the more consistent the data across the area and the more accurate it is, the more likely you are to get an approval, as long as it's all set up properly, right? And I always tell people, like, don't use PO boxes if you don't have to. Don't use residential addresses if you don't have to. If you need to for a short period of time, that's fine. Google has gotten really dumb with like virtual addresses and virtual offices and shared space. So like that's becoming a harder thing to do for some of our clients that don't have the commercial space yet. But we work around that stuff and we figure it out. But the data is essential, right? I mean, if you walked into a bank and you gave them a social security card that had the wrong name on it, or the wrong address on it, or you had some information that was conflicting, they're going to look at you like you're a madman. Same thing with your business. Like if you take your business in and there's mismatching information on your tax returns and your financials and your bank statement and your credit cards and all these what do you expect the bank to do? Like you're raising so many red flags that they're probably going to deny you just based off the fact that they can't vet or verify your business.
I'm sure this varies by lender, but how much of that process of like checking online presence to make sure the business is legitimate, consistent across the board is automated versus, manual humans going out and like searching?
I would say probably close to 100% of lenders now are doing stuff via algorithm and automation because that's the only way they can do it, right? So when I tell people like a lot of the stuff that we're doing is to, I'm not going to say beat the algorithm because that sounds like you're cheating, but match the algorithm and line things up with it so that we clear and get it to a spot where a human can review your stuff is really important. Like, and you got to know what those triggers are because they're searching close to 212 different data points. And if you fail the first 15, you're not going to get to the rest of them, right? The rest of them are pretty easy. The first 15 are the hardest because that's all your data, that's all your basic information. So if you can't even do that right, why would a bank why would you ever make it through their algorithm?
Yeah. And I'm sure you've reverse engineered that algorithm by now. What are like the most important ones, or maybe the ones that kind of get people dinged and
Yeah.
not approved?
I mean, addresses is one of the biggest ones, not having the right address. So, like, your Secretary of State address is set up as maybe it's still your registered agent, but you're in a commercial office with post office markings on it. Your Secretary of State should be matched up with that same address. Because then the chances are your tax return address probably isn't the right address either, right? So, like, address is like the very first place to start. Do you have a website? Like, do you have a basic, verifiable, legit setup website? It doesn't need to be anything extravagant, but it should be a domain name that's purchased by you that matches up with your company and matches up with the emails that you're using. Because if you're sending yourself in an email from sales at blueskybizsolution@gmail.com and your domain is blueskybizsolutions.com, banks are like, why didn't you take the extra steps to put a Gmail account or MSN account or whatever, a Microsoft account in place so that your domain matches on your email address that matches with your website? I mean, that's just like saying to somebody like, look, I'm lazy, I'm just going to slap this stuff on there, right? Like, is it super necessary? No, but it counts against you. Are you still using a personal cell phone number versus having a business phone number that's functioning off of a CRM or some other cell phone that's a business line? Industry codes, right? I came across a client a few months ago now. They did graphic, like commercial wraps, and their NAICS code, and I don't know who set these up for them, was a church and a daycare center. I'm like, I don't think you're a church and a daycare center, and I sure as heck don't think the banks are going to think that's funny, right? So, like, let's get this accurately reflecting on what it is that you're doing. On the same token, we don't want to niche down too far on that either, because if you're doing like remodeling, and part of the remodeling that you're doing is like remediation work, and renovation, kind of stuff for like natural disasters, you get flooded, whatever.
Like, yeah, restoration.
But you're not doing actual like super deep hazmat stuff, right? Then we don't want to say and have your industry code set up that you're a hazmat company because you just raise your risk level like 15 times above where it needs to be, right? So it's little things like that, but it's also your social media, right? Like, does your social media stuff reflect accurately what you're doing? Do you have a presence? Is the presence good? What do your Google reviews look like? What does your Google My Business page look like? Is it set up and clearly articulate what you're doing? Does it conflict with anything else and cause any kind of confusion, right? So those are the basic layers that they can get you flagged and rejected before it ever even gets to looking at your credit on your personal or your business.
How does that vary by in terms of like intensity of the vetting that these companies are doing? How does that vary per lender and then per like I guess loan type or like lending?
Yeah.
Um,
So I mean, we could just talk about the different types of lending, that's out there. But like, if you're trying to go do true commercial lending, right? Which is, I want to go set up an account with HD Tool Supply so that I can have a credit line with them, or I want to set up an account with Ford Commercial so that I can have a credit, line with them. They're going to be doing a lot harder looking into you and seeing if you have history of pay history on your business. Are you set up right? Does your stuff match? You know, some of that stuff you can get by if you've got a long-term relationship with them, but it really depends on the type of lending that you're trying to do. Like, if it's true commercial lending, they're going to get pretty scrutinized, right? If you're going to do like, we'll call them like fintech loans, which is like simple interest, lines of credit, working capital, stuff off of Stripe, stuff off of QuickBooks, Bluevine, whatever. It's less scrutinized because all they're looking at in those cases is just bank statements and cash flow, right? So your business setup is a lot different there, but that's why that stuff is typically more expensive, right? And not as favorable of terms because the vetting process is not nearly as in depth. But that's also why people rely on that, because they'll give you approvals when more traditional lending types won't. So that really does, just affect based off of it. So you just have to understand that. Like, if you're trying to get a quick turnaround without them doing a lot of investigating into you, you can plan to have expensive money, right?
yeah. And so like do you recommend people take those like more unfavorable loans, or is it just like completely dependent on the scenario that they're in or
Time and
situation?
place. But also, if you are in a spot where you have to take one of those loans, I think one of the most important parts of it is understanding how to get off of it and how it's going to actually affect you, right? Because I think people see, oh, $369 a day, right? Every day for 5 days isn't too bad. That seems like a number I can do. Well, if your cash flow timing isn't super stable, right, and you take 369 times 5 and times that by 4, that's $7,300 a month that's getting pulled out of your account. So when you actually look at the numbers and also the interest rates on that stuff, because those are usually 30 to 50% interest. I've seen some as high as
Wow.
70. And your margins aren't very high, and you have inconsistent cash flow. Is that a loan that's worth taking, knowing that it's going to affect you that way? Same with merchant cash advances, where they take 20% of your monthly processing, credit card processing. They seem very innocent because sometimes when you take them, you're not having a lot of money coming in, so you're like, oh, this is manageable. But then when you do have those big months and those big transactions that we rely on to have money set aside to keep going, they eat every last penny that you would have been setting aside, and now it's not a positive thing. So you really have to understand how they work and how it's going to affect you long term and what you're doing with that money. If you're using it to survive, absolutely not, right? I would go and find any other way to do things than to take that money out in survival mode. If you have an opportunity to
And
grab something that you can turn around and make a really quick, good profit off of, sure, if it makes sense, go for it.
you mentioned like the merchant, I think you called it merchant cash advance, where they take like the 20% fee off of all the payments that are coming in. Um, do those build your business credit?
Typically, no. And
They're like
typically, a
they're
lot of
almost
the short-term loans that are out there that are offered usually don't. I see a few that show up on credit reports from time to time. Bluevine shows up once in a while. I've seen Stripe show up on a few cases, but not too often. So they don't normally build business credit. So like when you're getting calls from these brokers that are selling you this stuff, and they're like, well, if you take this loan, it's going to build business credit. Chances are it's not. And they're just telling you that to close the deal and try to get you to build, do some stuff. Your better ways of building business credit are just following the structures and the processes that are proven and are safe, versus trying to just jump in and do a quick build with a loan that's probably actually predatory.
I feel like we already kind of like, I mean, this is the topic of this entire call, but like, what are the safe, like tried and true methods of building business credit that just work every time?
Yeah, I like at the end of the day, like you have to understand how business credit works. It's a tiered system, right? So it's 4 tiers that you have to work your way through. In order to get to each tier, you've got to have a number of reporting accounts to get into the next tier, and you've got to have those accounts reporting and showing payment and activity consistently every single month. So the easiest way is like think about it as I'm similar set up to a marketing agency, so we'll use this because it's a great example and it's easy. So my overhead is not very high, right? I don't have a ton of monthly expenses, right? So for me, what I did was I set up a Uline account, and this is going to sound like the stuff you read on TikTok and all that crap, so just bear with me here. So I set up a Uline account. I buy like my computer paper and some of that stuff through Uline. I spend a minimum of $50 a month with them. That builds, right? I also have an account with Credit Strong. It's basically like a preloaded account. They give you a credit report, a credit line, and then you just make payments against it where it accrues interest, and then at the end of the term, it gives you that money back plus your interest, but it reports, right? Those are the easiest ways to do that. And then I went and got a NAV Prime account because NAV Prime also lists as a credit account, right? But I just do monthly payments with them, and then that all reports the activity on my account. So now I've got 3 reporting trade lines. So with that, now I can get into tier 2. So tier 2 is where I went and got a US Bank credit card. I got a Chase Inc. card. Those 2 report to Experian, so they're building out my Experian card. I went and got a fuel card with Holiday that I use when I travel. I don't use it all the time, but when I travel to the airport and travel to the Twin Cities for work, I fill my truck up with that and then I pay it off, right? Because now that reports. So now I've got 6 reporting trade lines, right? So then I go and grab the Newegg account and I grabbed a Dell account. So when I got to buy a laptop for an employee, I go to Dell. If I got to go do I just got a new desk and a new gaming system / like video recording and desktop setup for myself, I grab that through Newegg on my credit accounts. So those things report, right? So it just kind of depends on how you want it to all feel, but those are safe accounts to build up with. But then I also have my credit card with US Bank and Chase. I just got over my 2-year mark, so I went, and because I have a relationship with US Bank, I got a credit line open with them. That reports when I use it, right? So now I'm building out this diversity and I'm building out depth. That stuff matters just as much as everything else, but it's all safer money, right? So that's kind of like how I would stair step it from an agency standpoint. From a home service standpoint, you can do the same things, but I always say rely on your suppliers. Most of your suppliers report. You just have to ask them, right? And get net terms set up with them. Get fuel cards for your trucks. Get credit cards. You can get a bill divvy card. If you got a cash heavy business and you've got cash reserves and you're kind of like, man, I don't really know what to do to build credit, go set up a ramp account, put $10,000 to $25,000 in that ramp account checking account, and now you've got a $25,000 secured card that reports to all 3 of the bureaus. And then just use that and pay it off as much as you can and grow that amount, and then it will stair step you into other accounts, right? So it just depends on the model you want to use and how you want to get there, but it all starts with, are you even set up right for them to make an approval off of you based on your business?
How do you learn this stuff? Like what resources are you using to like, because I feel like no one ever really teaches anyone about this stuff. Like it's very kind of almost like hidden, I guess. I could be wrong, but I feel like it's kind of, there's not a lot of, you almost have to search for it to find it.
Yeah.
How do you like
Well,
keep up to date? Up to speed?
yeah, so for me, part of it was like I learned it in application while I was in automotive, right? Like I saw it in works. Like how do you get somebody to a point where you can get them approved on their business alone? So like I learned a large amount of that there. The other piece of it is just a lot of research. We've worked with over 100 and probably 75 clients in our 2.5 years, right? So a lot of trial and error, a lot of failures, a lot of some disappointments, like, didn't move the needle the way you thought you would. Some things where you just tried it and you're like, nope, that doesn't work. So we refund those people because we thought we could and we couldn't, right? So some of it is just trial and error, and learning. And then the other piece of it is just as you are working with more and more clients and you're pulling more and more of their credit reports and seeing what's showing up on there, you're going, oh, cool, I didn't know this was reporting, or oh, I guess this isn't reporting anymore. So it is a lot of stuff to keep up with. I've been fortunate to be connected with a company called Credit Suite. They keep stuff updated. I use them for some of the information, but honestly, a lot of it just comes from feedback from our clients. I've been building a lot of relationships with banks as well and getting to know banks, so I understand, like, how do they report? When do they report? Where does it show up? What do they need to see? How does this affect your underwriting when you go to a bank like US Bank or Huntington or PNC or Ford or GM or whatever, right? So a lot of it is just getting in the right rooms with the people that know their back end systems and asking questions, right? And we have that ability to do that more than some because we're not a direct lender, so we're not a competitor. So they actually send us clients to work with to help fix things and update things versus seeing us as competition. So that helps a lot too.
Towards the beginning of the call, you mentioned building this, business credit so that you, even if you don't need it right now, things are going great, you're making a lot of money. You want to have the option and the ability to, like, be ready to, if something does, God forbid, happen to the business, be able to, like, get a loan to, go get through that hard time. Do you, like, recommend people take out loans that they don't necessarily need during the good times, or like how far do you have to go to be prepared for that?
So you're not necessarily taking out a loan. All you're doing is you're opening up access to it, right? So what I tell people all the time is, like, if you're sitting on a really good time right now and things are going well and cash flow is good, you're healthy, like, go get a line of credit and sit on it, right? And maybe you need to use a little bit of money through it once in a while. I'm a believer that people should use lines of credit when they're healthy, because it's a cash flow facilitator, right? I think one of the biggest mistakes businesses use is they rely too much on cash sometimes, when cash could be getting put to work in other areas and metrics and keep things moving for you. But you can go and apply for a line of credit. You can go get an approval for a commercial account with Ford or GM or with Case or whatever, right? And then they're there when you need them. That doesn't mean you have to have them or use them, but they're there, right? So it just makes it that much easier to utilize it when you already have it and you're already approved for it versus trying to get an approval for it when you're down and bad and you need it, right? So that type of stuff matters. And when you do have them, I tell people all the time, you should use them because then you also have good pay history and you're in good standing. The lender understands you. They know that you're a good client. So then if you do get into a tough time as well, you have that relationship and that history with that lender to fall back on to get you a little bit of leniency when you need it versus some of the guys that don't. They get no leniency and they just get cut off right away, right? And then also understand what lenders have some leniency and which ones don't. Amex is going to cut you high and dry if they feel like it off the whim. So
Because you're in the blue collar space, is there like a specific reason other than you kind of have, experience working in it, or do you ever plan on like branching out into other serving other types of clients, or is that like your ideal avatar? And if so, like why are you only sticking with that trade or industry?
we work with a few other type of companies. Like, I've got a law firm that I work with. I've got an insurance agency that I work with. We've got a CPA office that we're working with, right? So like we do branch out. Fact of the matter is though, like home service, blue collar space, it's a lot of guys that have a lot of expenses running through their business more than most of us. They've got vehicles, they've got equipment, they've got fuel, they've got supplies, they've got materials, they've got all these moving parts. And for me, that's just kind of what I'm comfortable with. I'm married into a farm family. I grew up in a blue collar area. I know I'm familiar with that type of person. I just kind of connect with them a little bit better, if you will. But I also understand that for the most part, they are the ones that are really, really good at the one thing that they do really well, and they don't necessarily have the capacity because of how much they're involved in and how hard they're working on growing their business to learn these other areas. And so nobody comes in and helps these guys and goes, hey, look, like we need to start doing this stuff over here so that you don't keep abusing and beating the crap out of your personal credit or get yourself into a bad situation and get over leveraged and in a lot of debt. Like you need to know how to talk to lenders. You need to know how to understand these contracts. You need to understand what's actually written in these and how these are going to affect you. Because, yeah, you might need the money, but once you get that money and you take it out, you may find out that the hook that comes with it wasn't worth the bait, right? So that's why we kind of resonate with them. Plus, quite frankly, it's a lot easier to build business credit with their type of businesses than it is others because they're using those expenses every single day naturally, right? So it's like you're already doing it. Let's just point them in the right direction and have it benefit you.
Perfect. What haven't we touched on yet?
What haven't we touched on yet?
Yeah. Yeah.
Yeah. I think understanding what lenders to go to, right? Like a lot of guys, they just try to go to a local bank because a buddy told them to go to a local bank. Well, that local bank might be good for a time, but as you grow and become bigger, what happens is you become a risk to that bank because you become almost too big where they're not liquid enough to cover your deposits and transactions. So because of that and the amount of restrictions and the filings they put against you, now you don't have many choices. You're stuck with that bank when you try to go somewhere else for something that's going to benefit you. That bank has basically total control over everything you do, and they get to tell you yes or no on things, and you have to unwind a lot of work. We call that golden handcuffs, right? Because they were your partner, they worked well with you while you were growing. Now that you need to grow and scale even more, they're like, nope, sorry, you're not going to do that. You're going to grow at our rate, right? So knowing who to go to, knowing that every single lender that you talk to is going to tell you that they have the right solution for you and the best products that are out there available for you, but they don't, right? And that's not a knock against anybody. That's just they're trained to do that, and they should be. They should be proud of their products and their services, and they should be selling it that way. But you as a consumer have to be aware that of why are they telling you that? Well, they live off of those commissions. So if they don't close you on a deal, they don't get paid, right? And that was the number one downfall I saw in the broker space and in the lending space was these guys need just truly unbiased guidance, right? From somebody that isn't getting paid out. And that's not to say that I don't get money from lending partners. They definitely send us referrals here and there, but we don't survive off of that by any means. I could get paid out nothing from any lender and I would be fine with our company, right? That's our model. So we just want to give guys as good of advice as possible based off of their situation, right? And so part of that is understanding where to roll in traditional banks, what traditional bank to roll in, because you can't just walk into a big bank and go, hey, I want a loan. Because if you're not in their industry type or their hitbox, they're going to tell you, oh yeah, we can do that. And then 2 months later, they're going to be like, we can't, we don't really want to work with your business, sorry. So now you just wasted 2 months of time, right? That's a big thing. Understanding how SBA loans get rolled over on certain lenders, right? Like when you walk into a bank, if they haven't even submitted you to underwriting and they're already telling you got to collateralize personal assets, walk out because they're putting their policies over the top of the SBA. The SBA hasn't even made a decision on you yet, right? So you just got to know how to ask questions, what to look for, what to think about, what to hear. Some local banks are good partners. There's nothing wrong with that, but they have a time and a place, and you need to have diversification and understand when to get out. So that's a big one too.
What are those questions that you have to ask a bank?
Yeah. I think just being point blank with them. Hey, this is my industry. This is how we have things set up. Here's my financials. How much of a picture can you paint for them of what your business is like? And just flat out go, am I a good fit for your type of lending? Or am I going to be one of those types of businesses where you always have to take me up to the board of directors to get approval? Because if that's the case, I'm not going to be a good fit for you. Right?
Those guys live off commissions, though, right? So they're just going to tell you what you want to hear.
In some cases, in traditional banks, yeah, not necessarily, right? But in broker world, sure. But that's the spot in the broker world where you need to understand the type of loan that you're putting you into, and go, okay, what is this contract? What are the terms? What are the upfront fees? How is the interest calculated on this? Right? How much am I actually paying? You told me I have daily payments. What's my actual interest rate on this loan? How much is this actually going to cost me? If I'm taking out $30,000, what's my repayment fee? Am I paying $45,000 back? Because that seems kind of high, right? So you got to understand that kind of stuff too and understand where it's flowing from. They're selling you a line of credit. How does this line of credit work? What happens if I have it out for the full term? How much is my interest then? Right? Because it might look cheap if you have it out for 4 days or 40 days, right? But if you have it out for 18 months, you might have a 58% interest loan. So you have to ask that stuff up front and understand it. If I buy a vehicle through you, what is it? How is this termed out? What does the interest rate look like? If I want to buy it out early and I buy 3 vehicles all at once, is that possible, or are these all going to be grouped together into like one pool where you can't differentiate the payoffs on them? Because if that's the case, I don't necessarily want to do that because I trade these every so often, right? So those are good questions to ask. When you walk into a local branch, that's where it becomes more relevant of like, am I even an industry type you guys want to work with? Right? Or are we just going to play a bunch of games, you're going to tell me you can do all this stuff, and then 3 weeks from now you're going to tell me we can't? Because if that's the case, I'm going to turn around and walk out. Right? Things to look for. How do you guys report? Do you guys report this all to my personal credit, or are you going to report this to business credit? And if they go, oh yeah, we report, you don't need to tell them, like ask them what bureaus, but you should be going, okay, what bureaus do you report to? And if you don't hear Paydex, Experian Business, or PayNet, then they're reporting it to your personal, or they're not reporting it anywhere. Right? So you got to understand that stuff too.
Yeah, it almost seems like, because you made that sound like very easy, but then if I went into a bank after this call, I would forget everything you just said and have no clue, like
Yeah.
even what you just said. Like, how is that something you help clients
Yeah.
with? Yeah,
Part of our service.
yeah, I'd rather just pay someone like you than have to.
So, like, that's part of our service, right? I mean, part of our monthly recurring fee is like we will help you with reviewing and understanding contracts. I don't want any of our clients to say yes to any of the lenders that they're working with until we get a chance to sit down and talk to the client and go, how did that go? What did they ask? What did they say? What are they wanting? What kind of collateral do they want to use? Are they going to report this to your personal? Is it going to be on your business, right? So that they have kind of like this almost. One of my clients is like, it's nice having that kind of shadow behind me that nobody's aware of, that I can just fall back to and go, hey, this is what they said, here's what they were doing, here's what they're asking for, is this a good deal or not? And then we can look at it and we go, okay, well, good is relevant, right? What is the ROI? What is the return? What are the benefits of this? What are the potential negatives of this? How hard is this to get off of? Where does this fall on your credit? What does this collateralize? Are we willing to let it collateralize a personal home because a greater benefit of the loan is worth it and we know it's going to be a successful deal, right? So we're just kind of there as a sounding board and a guide, really is kind of what we are, and that's what a lot of our clients really appreciate.
Definitely, I could see that. What have you seen change in the world of business credit, if anything, since you started?
Maybe not so much in the business credit side of things. I think the biggest change is being that more banks, more commercial banks are relying heavier on business credit scores and history to make approvals for people than they had in the past. But I think the biggest change I've seen is banks are getting just stricter overall. Like, for instance, like the SBA has put some new rules in place as of June 1st. So they're a lot harder to get approvals on because people took advantage of the way it was set up before. So you have to have yourself a lot more structured. You have to have clean financials. Your bank statements have to be clean. Your P&Ls need to be organized. Your balance sheet needs to be organized, right? Your personal credit has to be good, and your business credit has to be good because they bumped up the E-Trans score, which is their score out for measuring financials, personal credit, business credit, right? That went up 10 points from where it used to be. Tons of people used to fail at where it was. Now it's even harder, right? So you need to be prepared and prepped and know what they're looking at and how to understand what it needs to look like before you ever go and apply, or you're just going to waste a bunch of time.
Do you see anything changing in the near future? I mean, I know a lot of industries are changing with AI. I don't know if it would have any impact on this.
You know, a lot of lenders are rolling AI out to, analyze businesses, and that again, that all falls down to the algorithm side of things. Like, how clean are you, right? Are you clean enough as a business that when we submit you somewhere, because AI, everybody talks about AI, right? Everybody's like, oh yeah, AI is the greatest thing in the world. Cool. But it still has very strict parameters that it has to follow, and it does not have the human empathy side of things where we can look at, like, because you and I can sit down and we can talk to a client and we can review their financials and be like, you know what, you're a high character person, I understand where you're going and what you're trying to do with this, we'll make an exception and let this roll. AI and algorithms are never going to make exceptions. So if you don't pass that first layer of AI and the algorithm side of things, you're never going to get reviewed by a human, which means you're just going to continue to get declined. Which is why so many people get frustrated with applying for credit cards or applying for loans online, because it's like, I just got declined. Why? Like, I thought everything looked good, but it might have just been like, man, your mismatched address on your Experian report and your Secretary of State really bombed you, right? So
Yeah.
it's always going to be part of our lives. I don't think AI is ever going to go away in some capacity, but we all have to understand that AI is still guided by a standard of metrics. Is it learning? Sure. But it still learns within the confines of the parameters and the prompts that we as humans give it. And so it's always going to be, how do we kind of clear those things by making sure we match those parameters and prompts that they're going to be looking for, so that we can get past that first layer to get in front of a human.
Definitely. I'm wondering if it's like SEO, a lot of marketing people want to like kind of hack the algorithms and whatnot. I wonder if like in the future you can like trick an AI, say, "Well, like we are great to lend money to on the website somewhere in hidden tech."
Yeah, I mean, obviously, you can always play systems against themselves, right? I mean, there's a lot of ways that you can set stuff up and submissions up to kind of play the algorithm and get your approvals. Anytime you start doing that or gaming it like that, I always tell people, like, you start running into potential issues with living too much in the gray area, if you will. And that can get you in trouble, right? Because I know guys that are like, well, I went and got a shelf company that was aged and I added aged trade lines to it and that got me approved. And I'm like, cool. But what if you get audited in an SBA or a bigger loan process and you can't prove that those are actually your accounts that you've had pay history on, right? Like, how are you going to show that? You can't, right? And if you get caught doing that, you get blacklisted. If you get blacklisted, guess what? You're going to be using cash the rest of your life for that business, right? So, like, I just tell people, like, sure, it's there. Is it worth the risk? I don't know. If you never get caught, you could say absolutely it is. If you get caught, you're going to be like, man, I regret that day forever, right? So I just tend to be the one that's like, let's just do it the right way. It's not that hard. It might take a little bit longer, but it's going to benefit you a lot more in the long run than trying to cut corners.
Yeah, it's kind of funny how there's overlap in your industry and mine. It's pretty much the same thing. Like you can do some like really shady stuff in this space, and a lot of people do. But typically, like you're just gonna get punished for it later down the line, and the risk might not be worth the reward. But there's people that do it for sure.
Yeah, well, it's, I talk to a lot of, I've got a lot of different marketing friends. I come from automotive. I had to learn marketing pretty well in automotive as well, because I needed to learn how to understand and talk to all these companies that were bombarding us. And you could kind of start by just a series of questions, just asking attributable questions. Can you show attribution? Can you show lead to CRM to sale? I understand that not everything's going to have that connection, but if we can't even do it off the main basis of things, that we can put a dollar to these things and then follow it all the way through the transaction to show proof of sale, then I don't really want to hire you as a marketing company. Can you show me my dashboard? Can you clearly explain where the money's going, how we're doing this, why we're doing this, and how it's going to affect everything? Right? Because if they're trying to hide something, same thing with lenders. Like if they're not transparent with you and and it seems like they're trying to hide something from you or push you into something too hard, just like marketing, there's probably a reason they're doing that, and you probably need to walk away from that deal because it's not going to benefit you, right? So, absolutely, I think there are parallels 100% in that regard, and we're already doing a lot of the same things with how we structure clients to look and be presentable. That's what lenders are looking for too, so it's important.
One of the things we've recently noticed is that like Google's AI overview, ChatGPT, they're pulling from testimonials on like whether they're reposted from the Google business profile of a social media. If someone like mentions your business in Reddit when someone asks who's the best plumber, who's the best restoration company, um, is there any benefit in getting approved in the loan process from like publishing testimonials or just having more testimonials? Is that a factor that has any impact on getting
I
like
mean,
approval?
it's all relevancy, right? Like, all the algorithms are somewhat tied together. I think everybody's algorithm uses Google's as a backbone for a lot of the stuff that they do, because that's the biggest facilitator of data, right? So there's going to always be some relevancy there. Lenders, I would imagine, I would have to imagine that if they come across somebody and they have like a 1-star review and they've got 50 reviews, that's going to definitely play a role into how they view you. Because I know for a fact they'll look at your social media profile, and if you are a dick on social media, that does affect whether they want to lend to you or not, because they want to work with. Look at it this way: like when you get a loan from a bank, you are basically an extension of that bank, right? And so they want to work with people that are high value, good business people, run good, clean businesses, do things the right way, because that's where their money is going to be the safest, because they are giving you an inherent risk by extending money to you, right? So the bigger douchebag you are, if you will, right, and the worse you run your company, and the worse you treat your clients, the less likely you are to get a good approval from a lender, because it does matter. That stuff does matter if it's really bad, right? So it all plays into a role of things, because at the end of the day, they're still lending to a business, and they want to lend to reputable businesses that are going to be around for a while, right? And they don't want to lend to ones where they're like, man, this business is going to be gone in like a year. You know what I mean? So yeah, 100% it matters.
You kind of touched on like marketing agencies. Like you wouldn't work with one that's not transparent. There's also a lot of marketing agencies that are really shady. Like when you try to cancel, they will just try to keep as many of your assets as possible, not give them back to you, even though it's
Yep.
yours. Is there any like parallels to that in the world of lending, credit, like business?
Yeah, a lot of the merchant cash advance companies, a lot of the short-term working capital companies are that way, especially if it's like daily, weekly payments, right? Um, I've got some horror stories from people that have gotten behind in payments and they've gotten threatening emails, right? I've got a guy that got behind, was trying to get out, went through a debt consolidation company to break the contract with them, and things got like nasty for a few months, where he even got an email from, he assumes it's from the broker, because the broker that sold him the loan disappeared. He couldn't look him back up again, but he got an email from somebody that was connected to the lender that sent a picture of his cousin with her kid and was like, hey, like if you don't get cut back up on payments, like bad things are going to start happening to family, right? Like
Wow.
we got more than one example of that happening with different clients, where it's gotten very violent. They've gotten threats of harm, death, all sorts of stuff. So like you really got to understand, what am I signing up for? Is the short-term injection worth the potential harm of this stuff? And these companies are really good at selling you on stuff that it isn't actually what they're selling you on, right? So that's where having somebody like us is so important, I think, moving forward. I would love to be a big reason in 2 to 3 years that these other types of companies don't really have a foothold or exist anymore, because we've shined a light on their poor ethics and bad practices.
No, I love that. I didn't know that existed.
It's
Well,
bad. It's yeah. When you follow the money, if you will, you see that it's connected to some pretty irreputable sources that I wouldn't want to be connected with in any way, shape, or form. But that's the way it is, right? If there's a lot of money to be made, guess who usually gets involved in those things?
yeah, Jeffrey Epstein, right?
Yeah, people that we don't want to be connected with, gangsters, mobs, drug cartels, all that kind of stuff. Like that's where it's all originating from.
I never really thought of that, but I guess it makes a lot of sense. I think criminals are attracted to money and
It's
businesses around money.
It's like a legal form in some ways of like money laundering, I swear. Like that is what I would attribute it to. I'm like, it's a great way for somebody that has bad intentions to wash a lot of money through a semi-legal function and system so that it's untraceable. It's really what's happening, I would guess.
What are the other, like in your industry, like what are the other like red flags people should be looking out for, and like, not touching with a 10-foot pole?
Yeah, I mean, it's just, if it really comes down to like the ability to understand the type of loan that you're in, and if you're asking people questions about it, or if you can't easily understand what the actual interest rate you're paying is, or you can't understand where your payoff term is, or I've got a guy right now that's like, man, it's like trying to figure out what my payoff is. He's like, I almost have to like drive over there, grab somebody by the scruff to get them to tell me my payoff. I'm like, that's a problem, right? And I was like, did they clearly articulate their program to you up front? He's like, no. He's like, I could never get anything out of them up front. I just needed the money, and they were the only ones that were offering. I'm like, okay, well, we should have stopped there, right? But that's what they do. They play on fear. They play on your need to do it now. They sell you on benefits that may or may not be there. And don't get me wrong, like there are definitely some that are in that space that are legit, that are doing it for the right reasons. But they are usually the ones that are articulating it to you clearly, and they're not selling you on something that doesn't really exist or lying to you about it. They're like, here's how it is. This is going to suck, but we're going to do this, and then we're going to roll it into this, and then we're going to do this and take care of all this stuff. Here's our sequence, right? So those are the differences that you really have to understand. Like, do they have a long-term play for you to help get you off of it? Or are they just trying to push this on you to make a quick sale and get a good commission? Because they make good money off of these types of loans. So a lot of them just show up, try to sell you this stuff, and then disappear. So that's really what you have to look out for.
Is that legal to not like disclose that information up front?
I mean, they disclose it in the contract, but unless you really understand how to take apart a contract and read it, you can't. But you got to understand, like, the business lending space is a very, very unregulated space. There really isn't anything that's like illegal in the business space, if you will, right? So,
like consumer protection.
yeah, there's not like the Consumer Protection Acts like we have on the personal side, right? Where like on the personal side, you can't really get away with a whole lot because of the Privacy Acts, the Consumer Protection Acts, all that kind of stuff. That doesn't exist on the business side. So it is really like the wild, wild west in the business, and you better come ready to play with the big boys, or you're going to get rolled.
Yeah, that's pretty terrifying. That's I didn't know that it was like that. I would almost think it would be like the opposite, but I guess I don't know.
Yeah.
It's insane.
It's like it literally is like the wild, wild west with some of the stuff that comes up. I'm like, that doesn't even sound like a legitimate thing. But they're selling it, so I guess there's some legitimacy to it. So yeah.
Yeah, I mean, I don't know. Some people like the Wild West. That sounds like a disaster waiting to happen, though. So, is there anything that like, anything we missed, or anything else you wanted to like touch on?
You know, I don't really have. We kind of covered a lot of stuff. The biggest thing I always tell people is just do research ahead of time, right? Like if you're trying to take a loan out and you do a Google search on the company that's trying to offer you the loan and you can't find a lot on them, chances are it's probably somebody you don't want to do a loan with, right? Because legitimate companies will have some form of a presence online that you can at least search out and find. And then ask questions. If they're trying to take money from you up front before they even do a loan, don't take it. If they're trying to take money off of how much they collect you and they're really not doing a ton of work, ask questions like, why do you guys need this money? What's it going for? What is it covering? What are you guys doing extra that you're going to be charging me for this with? Some of them do have fees, on top of what they're doing because of the connections they've made and because they actually will do a lot of additional work for you than a normal bank won't, right? But you got to look for that stuff and you got to understand it. If your gut tells you it doesn't feel right or it's too easy, chances are it's probably going to be a really expensive loan, right? So like Stripes, QuickBooks, some of these guys have loan lenders that are in their like customer CRM systems, right? Like there's a reason these clients and these systems are adding this stuff because there's a lot of margin in it, right? So before you use it, understand what it is, how it's going to affect you, and is it going to actually benefit you or not.
Yeah, we use Stripe, and they really want me to take. I think it's like 30. It was like 15,000, and they keep increasing it every month. Like there's just like.
The more you use us, the cheaper your interest rate and your payments are going to go, right? So like one of their biggest selling hooks is you take 15,000 now, we'll take 20%, and as you use us more, your fees are going to go down. Well, when you actually look at what their fees go down, it's like, oh, it went from 20% to like 19.875. Cool. That really saved me a lot of money, right? But that's how they get you because that's how they kind of sweet talk you into that stuff, right? So
Yeah.
Be mindful about it. Chances are there's probably safer money to go get. You just haven't tried.
Definitely. Awesome. So, Paul, where can people find more about you? Like, where do you want to send people to? And what kind of business they should reach out?
So, obviously we've got our business website, which we're revamping to reflect more accurately what we do because it still shows like and feels like we're a broker, which we're really not. So we'll get that updated, but it's www.blueskybusinesssolutions.com. If you want really accurate and up-to-time information on like what we're doing, how we do it, getting on Facebook and following me at Paul Childers is probably the best way to do that. Same with LinkedIn, Instagram. It's just PA Childers. TikTok. It's Paul Childers. That's where you're going to get the most relevant and up to date kind of contacts and posts and information. That you can kind of get an idea of what we actually do and how we do it, because we post a lot of client success stories and testimonials.
Yeah, I also like how you give, like, pretty much, it seems like you're giving the farm away on Facebook and LinkedIn. Like, you post exactly what you're going to do,
Yep.
which is awesome. I love people that do that.
I've actually had people that have mentioned or reached out to me, and they're like, "Hey, I've been following your stuff for a year, and I've been applying it behind the scenes, and we just went and got our first fleet account with so and so." And I'm like, "Oh, cool! Like that's awesome." But for every one that actually takes and runs with it, you've got 20 that look at it and they're like, "Oh, that's cool," and then they never do anything with it, right? So I believe in giving away, whether you want to call it Alex or Hormozy type of deal or whatever. I've been giving stuff away longer than Alex Hormozy has been relevant, going all the way back to when we did workshops, through our dealership in 2015, 2016. I just believe that that's the way that you should do it. If you have information that can benefit another human, and you put it behind a paywall, you are by attribution a dick, right? Because you shouldn't be withholding information that can make somebody's lives better or easier, or prevent them from getting into a crappy situation. So I believe in giving it away for free. You'll find the people that want to pay for it because they want it to be guided, a better experience, and all that kind of stuff. But you always have those other people out there that could benefit from it, and that's just the way I kind of live my life and always have.
I agree, and I bet it's worked out. It's worked out for me. I feel like when you provide value to the market, like especially for free, that money is going to find its way back to
Yeah.
you.
And it sucks at first. And you've been there, if you're marketing and you've done a lot of stuff giving away, like it sucks when you're a startup company because you're like, when is this going to reciprocate itself to you?
Yeah.
But as I stand 3 years, almost 3 years in, I can tell you it will reciprocate itself to you. The market always does. So you just kind of have to put your head down and remember why you did this and why you started your company, and just stick with it and be very diligent and consistent, and it will all come back.
Heck yeah. Awesome. Well, man, it was great talking to you.
Likewise, it's good to meet you semi in person.
Yeah.